Hello, FTSE traders. How are you doing? Going to run through the FTSE chart with you. I'm quite bullish on the FTSE for one good reason. We have managed to fill a gap that was from March 2024. We also know that this 7,700 zone is a very, very big zone. If I pan out to the weekly, you should see here back in April 24, which was the last low for a good year and a bit. Well, for a good year. So support wise, I like it. I like it a lot for support, and the fact that we have had two nice green candles. Yes, albeit a little bit choppy. And of course, with every tariff announcement and every new policy that's going out and into public at the moment, we are being whipsawed. But with the FTSE, it's obviously the points that whipsaw are a lot less than the Nasdaq or the DAX. And I'm liking to look at this chart. If I show you the Nasdaq real quick on the weekly, this is one reason I'm not really trading the Nasdaq, because I don't like this weekly candle. I feel like it may just consolidate in quite a large zone before making its move. And these points, 2,000 point zones, are absolute account killers. So for me, I like to watch it, don't like to trade it. But this is why I'm preferring the FTSE and the DAX on a weekly for trades. So one reason why I am liking the FTSE is because of oil. If I show you oil. Now, historically, I've had this buy zone in oil set for quite some time. I think for a couple of years now. It sat for weeks and weeks and weeks in 2024 above it. And it's been a buy zone historically for me because of 2021. And the fact that we've tagged it and we are now putting in hammers above it tells me that that breakdown gap of 2063 that we had from early April, will at some point fill. Obviously, markets don't go up and down in a straight line, but I do like it. So if we just scroll to the 4-hourly, and let me close that. So here's the breakdown gap from Wednesday, 2nd of April, when Trump announced the blanket tariff. And then we've slowly been making a recovery. Now, it's a bit of a messy inverse head and shoulders, because this, ideally, if I use the brush, would show nice inverse head and shoulders. But it's, we have this bigger consolidation area before it's popping up. One thing I will say is that the 4-hour RSI overbought has flashed. So I would like to wait for it to retrace to this $62 area. And if we go down one more time zone, you'll see here around this area here, 61-ish, 61-ish. So yeah, perhaps not even 62, I'd probably say, if you are going to trade oil. It's quite a nice one, but it's the FTSE that I prefer. Here it is on the hourly. Again, similar to oil, we've had some overbought RSIs flashing up, so I'd be hesitant to enter straight away. I like these 3 touch points here. We can see 1, 2, and 3. I'm going to put a little circle on them for future reference. We have it's going to make me click every time. 3. 1, 2, and 3. Let's stick a line underneath it so we can see the price on that. 81.50. And you can see where it's been resistance on these areas. Resistance here. Could we pan out any more? Let's have a look. Over by the 4-hourly. So yes, it's a crucial price area is what I'm saying. So I would like to take along around here. Target would be the breakaway, the breakdown gap. And I would set my stop roughly around here. So what does that give us? That gives us it's a good R&R. It's a 1 to 9. So depending on your account size and trade size, might even say just shy of the 8,000. We know the 8,000 is a huge support area. You can see the demand in this area here. So that is my view on the FTSE. I am not really trading big at the moment. This is a time for capital preservation. Things are very uncertain. So if you want to take trades, obviously do your own research. I'm taking them nice and easy, waiting for entries, taking the sizes nice and small, see whether it works. But for a swing, this is a good trade idea for me. So good luck on that.